So today I'm going to explain some of the problems of income from salary. So here Mr. Ravi Kumar is an employee of a private company in Bangalore. He gives the following information for the previous year 2018-19. Compute the taxable salary. Basic salary rupees 16,000 per month. Dearness allowance rupees 12,000 per month. 2,000 per month enters into retirement benefit. So here the rupees 2,000 per month will be taken for the purpose of calculation of HRA, taxable house rent allowances. So if any DNS allowance which enters into retirement benefit, that will be taken for the calculation of taxable HRA, otherwise that should not, DNS allowance should not be taken. City compensatory allowance, it is taxable. Family allowance, education allowance for two children at rupees 350 per month per child. So here in this case, so the assessee is claiming is allowed to have exemption for rupees 100 per month for maximum two children. So here the assessee is getting education allowance for two children at rupees 350 per month per child. So therefore he can get exemption of rupees 100 per month for maximum two children. House rent allowance rupees 3,000 per month, but he pays rupees 6,000 per month as actual rent. The assessee is availing an allowance called as house rent allowance HRA, but actually he is paying rent of rupees 6,000 per month. So for this we have a calculations to find out taxable HRA. Entertainment allowance rupees 1,500 per month. Company has provided a telephone at his residence by meeting all the expenses amounting to rupees 12,000 for the year. So generally it is not taxable, it is exempted because so here the nature means area of the business is not in the business office, it is in the residence. So therefore there is no work done in the office, so it is the work done in the residence of the assessee. So moreover expenditures incurred at the residence, at the living area of the assessee, so it will not be taxable under income from salary, it will be exempted. The company paid his income tax of rupees 12,000 during the previous year in his taxable income, it is taxable. Conveyance allowance rupees 16,000 for visiting branches. So any allowance given to the assessee for visiting branches are not taxable. So otherwise any conveyance allowance are given by the employer to the employee for working in the office area. For doing work in the office area, that will be taxable. For visiting the branches by the assessee, so such case of allowances are not taxable, are exempted. Next, he is allowed to use one motor car of 1.6 liters cc both for official and personal use. So here with respect to the motor car, so if the cc of the motor car is up to 1.6 liters or less than 1.6 liters, so we have a standard amount of allowance of rupees 1,800 per month. If the assessee is using driver along with the motor car, so along with the 1,800 per month we have to give 900 rupees for the driver. So in this case we have to check whether the motor car cc is above 1.6 or less than 1.6 or up to 1.6. So if the cc is less than or up to 1.6 liters, we have to give a standard allowance of rupees 1,800 per month. If it is above, if it is more than 1.6 liters, we have to give 2,400 rupees per month. The next, provision of the following domestic servants who were paid by the company. So there are some as allowances, there are some services given by the company. So these are all taxable under income from salary. He and the company contribute 14% of salary towards the RPF, recognized provident fund. So they have not given the amount of contribution, instead of that they have given percentage of contribution. So for this purpose, for the calculation of amount of contribution, salary will be basic salary rupees 16,000 per month plus dearness allowance which enters into retirement benefit. So how much amount is entering into retirement benefit, that will be taken into consideration for the calculation of salary in respect of contribution towards RPF. That means for the calculation of amount of contribution made by the employer, we need to take salary of 16,000 plus 2000 per month, 18,000 into 12. That is called as salary for the calculation of contribution. Then in such case, under the Income Tax Act, up to 12% will be allowed as exemption. The assessee will be allowed to claim exemption up to 12% of regarding contribution towards RPF. Excess of 12% will be taxable. Like here in this case, 14% they have contributing. Out of 14%, 12 up to 12% will be exempted. Remaining 2% will be taxable. And the last, interest on the above fund rupees 21,000 at 15% per annum. Sorry, per month. Sorry, 15% per annum. So here in this case, they have given the amount of interest and the rate of interest. So with respect to the interest on RPF, interest on recognized provident fund, he will be availing the exemption of 9.5%. So he can claim up to 9.5% as exemptions. Excess of 9.5% is taxable. So now let me see the solving method of these problems, how to find out the taxable salary of assessee. So here the format will be computation of taxable income from salary of Mr. Assessee for assessment 2019-20. So first, basic salary of 16,000 per month. Basic salary will be 1,92,000. DNS allowance rupees 12,000 per month. DNS allowance 1,44,000. City compensatory allowance rupees 1,600 per month into 12, rupees 19,200. Family allowance 1,200 into 12, 14,400. Educational allowance for 2 children at 350 per month per child. So first, educational allowance 350 into 2 children into number of months, 12, 8,400, under which he can avail exemption of 100 rupees for maximum 2 children per month. So therefore exemption amount will be 100 into 2 into 12, rupees 2,400. Taxable amount of education allowance is 6,000. House rent allowance rupees 3,000 per month, but he pays 6,000 per month as actual rent. So regarding house rent allowance, we have a separate calculations, that is nothing but calculation of taxable HRA. For this, first we should take actual HRA received. So he is receiving HRA of rupees 3,000 per month from the employer. 3,000 into 12, 36,000, less exemption whichever is least. So whichever is least among these three cases, that should be taken as exemption, remaining will be taxable. So here first condition is actual HRA received, actual amount of HRA received from the employer, that is nothing but 36,000, rent paid minus 10% of salary. So here he is getting 3,000 per month from the company, but he is actually paid rupees 6,000 per month for house. So that is what rent paid, 6,000 into 12, 72,000 minus 10% of salary. For the calculation of taxable HRA, as I said earlier, salary will be the basic salary plus DNS allowance which enters into retirement benefit plus percentage of commission on sales. The combination or the mixture of these three cases or these three transactions or these three facts or factors to be considered for the calculation of salary in the respect of HRA. So here they have given basic salary as well as amount of DA which enters into retirement benefit. So therefore 16,000 salary for HRA calculations, basic plus DA which enters into retirement benefit plus percentage of commission. So 16,000 plus 2,000 per month, 18,000 into 12 will be getting 2,16,000. 10% of 2,16,000, 21,600. So balance will be 50,400. The next 40% of salary. Suppose if the assessee is residing in metropolitan cities like Chennai, Kolkata, so Delhi, etc. Instead of 40,000, we should charge 50%. Instead of 40%, we should charge 50%. So other than these areas, other than metropolitan cities, if the assessee is residing any other areas, so 40% of salary will be allowed as exemption. That means 2,16,000 into 40%, 86,400. whichever is least will be exempted. So among these three cases 36,000 is the least, therefore taxable HRA will be nil, 0. So entire amount is to be allowed as exemption, HRA will be nil. The next, entertainment allowance rupees 1,500 into 12, 18,000. Telephone expenses are exempted because it is placed at his residence, at his living area, so there is no office nature, so it will be exempted. Income tax paid by the employer during the previous year rupees 12,000 taxable. Conveyance allowance is exempted because it is given for visiting the branches, not for working in the office. So there is no raising of profit for visiting of the branches, so for that purpose it is exempted. The next, motor car facility. So as I said earlier, if the CC of the motor car is up to or less than 1.6 liters, a standard amount of allowance is to be given of 1,800 per month. Therefore taxable amount of motor car facility will be 21,600. Then the assessee is availing some of the servants or services from various services from the employer. Those are watchman, sweeper, gardener and cook. So total amount of services will be 23,040. 600 into 12, 360 into 12, 360 into 12, 600 into 12 months. The next, contribution towards recognized provident fund. So here they have given rate of interest, rate of percentages. So for that we need to find out amount of contribution made by the employer. So that means contribution towards RPF. For this purpose, the salary will be basic salary plus DNS allowance, which enters into retirement benefit, into 12 months, because they have given per month manner 12 into 14%. That means 18,000 into 12 into 14%. You will be getting 30,240. So under the Income Tax Act, the assessee is claiming, is availing exemption up to 12%. So basic salary plus DNS allowance 18,000 into 12 into 12%. So 25,920. The balance will be taxable contribution made by the employer towards RPF. The next, interest on RPF. So as per the income tax, up to 9.5% rate of amount of interest will be exempted. So here interest on RPF will be 21,000 less exempted up to 9.5% on 21,000. 21,000 to 9.5 divided by 15. That means, so here rate of interest will be 15%. Out of 15%, how much will be 9.5% rate of amount or amount of interest? That should be find out. Remaining is taxable. So total amount of interest will be 21,000 at the rate of 15%. So for that we need to find out what is the amount of interest or 9.5%. That is 21,000 into 9.5 divided by 15%, 13,300. Balance will be taxable. So after adding up of all these incomes, all these transactions, the balance will be gross total gross salary. So from this less deduction under section 16 like professional tax or any other deductions, so they have not given. So therefore taxable income from salary will be 4,62,260. So for the pre-assessment year of 2019-20, the assessee is having taxable income from salary of rupees 4,62,260. So likewise, so here you will be having one illustration. So go through this and calculate the amount of taxable salary for the assessment 2019-20. So let me explain each and every factors. How do we take which are the taxable and which are the exempted? Mr. Raju is an employee in HMT Bangalore. He gives the following information for the previous year 2018-19. Basic salary rupees 20,000 per month, it is taxable. DA rupees 12,000 per month, but they have not given the portion of amount which enters into retirement benefit. So in such cases, this will not be taken for the not to be taken for the calculation of HRA or any other kind of allowances. contribution towards RPF, calculation of taxable HRA. So DA should not be taken. DA should be taken if they have specifically given retirement benefit entrance. Otherwise, that should not be taken. So here it should be taken for the calculation of taxable salary, but it should not be taken for the calculation of taxable HR allowances like HRA or RPF. Then family allowance of rupees 1200 per month taxable, city composite allowance taxable, education allowance for two children at 400 per month per child. So in this case, he will be the assessee is availed an exemption of 100 per month for maximum two children. 400 into 2 into 12 less 100 into 2 into 12. The balance will be taxable. Entertainment allowance rupees 1500 per month, it is taxable. House rent allowance rupees 3200 per month, but he pays 6000 per month as actual rent. So for this we have a calculation, that is nothing but calculation of taxable HRA. Actual amount of HRA received less least of the whichever is least of the following. Actual HRA received. Second one is rent paid 6000 per month minus 10% of salary. 10% of salary means only basic salary. 10% of 20,000 per month, that means 20,000 to 12, you will be getting 2,40,000. So 10% of 2,40,000. The next, he is residing in Bangalore, so it is not a metropolitan city, so therefore 40% of salary. Whichever is least among these three cases will be exempted, remaining balance will be taxable. Company has provided a telephone at his residence, so it is similar to the previous cases, so it is exempted because the nature of the place of the business is residence, living area of the assessee. That should not be taken for the calculation. Company has paid his income tax of rupees 12,840, it is taxable. Conveyance allowance of rupees 16,000 for visiting the branches. So for visiting the branches there is no rising of profit, therefore it is not taxable, it is exempted. He and company contributes 14% of salary towards RPF. It is similar to the previous transactions or previous cases. That means for this case salary will be only basic salary, because there is no specific information regarding the entering of DA into the retirement benefit. In such case, we should take only basic salary for the calculation of RPF. 14% on the 2,40,000, 20,000 per month. So then here also up to 12% he will be availed exemption, remaining will be taxable. And similarly, interest on RPF was rupees 30,000 at 15% per annum. So for the interest on RPF up to 9.5% will be allowed as exemption, remaining will be taxable. 30,000 into 9.5 divided by 15. The amount will be, the balance will be taxable interest on RPF. So the total of all these transactions will be gross salary. From the gross salary less deductions under section 16, like any kind of professional tax. If they have not given, that should be taken. If they have not given, that will be nil. The final balance will be taxable income from salary.